Hello everyone. Let's start that again, shall we? It would help if I unmuted the mic. Listen, you're all very welcome to today's Trading the Markets Live, brought to you by the Live Trade Room. Now today's Monday, the 16th of July. Hope you're all keeping well. So what we look for is some high probability trading opportunities during the US Open. So without further ado then, let me draw your attention to our risk warning. Of course, be aware of the risks involved in trading financial markets, but like I was just explaining there when I realized the mic was muted, was that therein lies our ability to be consistent when we trade these financial markets. So it's actually the appreciation of that risk is a really strong focus of ours. So without further ado then, let's do a quick review of potential market moving news. And the reason why we need to understand what's happening from a news flow perspective is purely based on making sure that we don't get caught in the crossfire. And what we mean by that is if there's a major news announcement out and we're not familiar of it or we're not aware of it, then it has the potential to take us out of the trade. Not because we're incorrect or because the analysis is not right, or it's just purely because we're getting chopped up in intraday volatility. So it's important to just take note of this information. So we go over to Forex Factory, and if you scroll down, it's a bank holiday in Japan today as well, so it's important to note, certainly during the Asian session, that there would have been a certain degree of a lack of volatility, perhaps a lack of volume in those markets, because all those traders and all those financial institutions are not participating in the market over the course of the day. Okay, so what we have a significant GDP figure out in the early hours of the morning, impacting the Chinese currency. And what we've seen is a really strong performance. It was expected 6.7. Yes, that was the figure that was achieved, which is very, very strong performance. If you compare that against most Western countries, it outstrips them by a multiple. And this is a quarterly figure as well. So in addition to that, all we've had really, and what we can really focus on for the remainder of the session, is that there's very little news for us to really be concerned with. At 1:30 p.m. London time, we've had some retail sales figures out impacting the US. So we've had a slightly positive figure in the retail sales, but these are monthly figures, don't necessarily impact the overall view necessarily of monetary policy by that of the Fed and their approach to either increasing or decreasing interest rates. So they are retail sales figures. So the only other major news event for the day would impact the New Zealand dollar, which is a CPI figure at 11:45 p.m. and again that's London time. So we can now go back to the charts, knowing that there's no significant news flow that could impact the trades we're about to take. Now I want to take you to a couple of trades that we've been looking at very early on in today, and that was looking at the yen pairs and looking to trade some continued weakness in the yen. So really, we've got two strong currencies to trade against the yen, certainly today, and the first one is the pound yen. So really, we were looking for this market to break above the 148.97, and I want to just take you down to the shorter term time frame, because we've just recently had a really strong pullback to previous levels of support, and we've already had a bit of the move. So actually, we should have taken this probably 10 minutes ago, had a really strong pullback. If we even go down into the smaller term time frames, we've had an attempt, and this is really what we look to trade. So let me just get up my pen briefly for you. So it's this kind of turnaround price action that we like to that we really look to trade. My pen is just pausing for just a second, but now I seem to have it. So we've had the pullback to resistance in and around these levels, so we can see that, and it's attempted to sort of try and break that these lows down here. It's trying to break that, and as you can see, it structurally fails. So we're no longer moving to the downside. So it becomes a bit of a no-brainer opportunity to look to buy this market at the 148.98. So this is exactly the type of I suppose setups that we look to trade, where the market, if we don't capitalize on the breakout and the market pulls back really significantly to a major level of support and resistance, and I want to share that resistance with you. It's just in and around this area, which is why we've got the double band. So really we want price action to do exactly what we expect it to do, and this is pull back off the highs, come back to previous levels of resistance, which is very likely to support the market, and we get the strong move to the upside. So a fairly straightforward trade. Now it's going to be interesting really to see if we get another opportunity to get into this market to the upside. So we will be looking to see if we can capitalize on a bit of a pullback at this stage. So that's one of the markets we're going to look at. Another market, and again it's sticking with the yen theme, is to potentially buy the euro yen. So we're seeing kind of a similar situation, pull back to previous levels of support, nice indecision candlestick, and now we're getting the move to the upside as well. So again, you're seeing the similar kind of bit of price action, really struggling to break below the 131.54 and also break above the 131.58, pushing prices higher. So a bit of erratic price action there in the last few minutes. However, it would still qualify us for some opportunities to take this market to the upside. So we'll definitely look at these two. So going through the remaining markets, I want to just show you where we're at. Really strong rejection in the euro dollar on Friday. So we were expecting these markets and we were trading these markets to the downside, but then we got a series of structural failures across different time frames, driving prices to the upside. And actually today, a breakout above the 1683 represents a no-brainer opportunity to buy this market. We're currently experiencing a pullback, so we can certainly go into this and see, has this market come back to previous levels of support? The answer is yes, it has. And we'll see how does this market stack up for us on a daily time frame. So you can see that there's kind of a level in here that could provide an opportunity for the euro to strengthen against the dollar. So we've had the extension lower, so now what we want to do is to see this market roll over to the downside before we get the next move to the upside. So we are looking for a structural failure to the upside around these levels. So we'll keep an eye on that one as well. And the pound dollar. Now what we've experienced over the last 3 to 4 weeks is a strong move in the first half of the day, followed by a lot of weakness creeping into markets for the latter half. So that is still potentially the case. We're already seeing, like this market for example, pull back to a level that could allow us to get into this market to the upside, and I'll show you what I mean by that. Again, if we understand support and resistance, could we identify this level in here as a level for this market to come back to? The answer is yes, we could. Did we get this price action pushing back to the 32.50? Yes, we did. And if we take it down to the shorter term time frames, we'll have a look at the pound dollar. So we've had again this sideways moving market there for a period of time, structural failure, and we start getting this market moving to the upside. So really there's a couple of good opportunities in this market, and I'm going to put these 4 markets up so that we can look to keep an eye on them. Okay, so for ease we might just switch these 2 markets around, so we'll have the euro just at the top row and we can have the pound just down at the bottom. So these are the markets we're going to look at trading for the session. So we have a process by which we can identify opportunities. based on the bigger picture move. So there's a multi-time frame analysis built into our approach as well. So it's really putting all these things together over the course of the trading session. So just want to review some other markets. A little bit of indecision creeping into Friday's and today's candlestick, impacting the dollar yen. And because both of these markets are weak, certainly as things stand, although the yen has retraced probably 50% of today's move in the pound yen. So do be mindful of that anyway. The dollar CAD is just bouncing off this level and looking like it's going to squeeze lower. So that's where these levels of support resistance can act as magnets to these markets. So we're getting a bit of a rollover back to the 30.83 level, back to these levels down here. So that's the dollar CAD. The dollar Swiss, we're seeing kind of a triple top. So really, we understand that parity, which is 1.00, is a really strong level in a market like this, and we're seeing price interact and behave around that with a rejection to the upside on Friday, followed by some selling coming in, and now actually we're below parity as things stand. So it just shows you the importance of understanding these levels, even if it's for a psychological perspective. The Aussie dollar not doing much, a little bit of indecision if more than anything today. So we've had a bit of a strong move, and a lot of that has retraced. The New Zealand dollar next has the potential to squeeze higher. We do anticipate this market lower eventually, but we might get a little pullback in the interim. The euro pound, not really doing an awful lot, but you can see the 10-month period of consolidation sitting in there. So do take that into consideration as well. So really nothing really tangible that we can work on. We're going to look at trading the euro yen and the pound yen. Moving on to the gold, we do anticipate this market lower, and we will keep a close eye on it, but we don't expect it to move lower anytime soon. US oil, we're getting this bit of a negative price action really in the US oil market. So we would be interested to see if we do get a close below the 69.26. And what we're looking at is 1 year's worth of price action, driving these prices to the upside. Now, I suppose the irony of that particular move is that it was fundamentally driven with OPEC looking to restrict the supply of oil and causing these prices to push to the upside. Now, there's a global glut when it comes to stockpiles of oil. So and OPEC have recently decided as well to look to withdraw and remove some of those restrictions, meaning there'll be more oil available on the markets. But because the stockpiles are so low, it was anticipated that in actual fact the decision made by OPEC potentially wasn't significant enough. So what we've seen straight off the back of the news event, just at this price point here, we're at about $65. We see a really strong move to the upside for a whole week, and then the market just sort of sits around the $74, $75 level, and now we've had a significant reversal of that level. So we're interested to see how price behaves around these levels, and if we do we get the price action for this price to push higher, or will we get the price action for this market to move lower? That of course remains to be seen. So just be careful just right now with the oil market. Just make sure you don't you're not quick to be jumping in, because there's clearly a little bit of a restriction in terms of these prices pushing higher. There's clearly a little bit of selling coming into these markets around the $71.5 levels. So with that in mind then, that's the US oil. So looking at some of the global equities, and we have just opened in the US stock markets. So let's see what we've seen. A really strong indecisive candlestick really is all we've seen since the open. So nothing of any significance. However, there is a build-up of support and resistance around this level. So let's see how important that level actually is. So it could be argued to be a significant level in and around the 27.99, which is $2,800 level, and you can see the reluctancy for this market to actually break to the upside as well. So a little bit of indecisive. So for that reason, we're going to refrain from taking an opportunity. Same situation. We'd prefer to go with the market and look to support prices and buy from these lows if we get those opportunities. However, the Nasdaq or the US 100 is bouncing off the 73.99, 7400 level, and again very, very indecisive. And these are all-time highs as well, so it's important to know and be mindful of the potential resistance at these levels. Okay, so that's the S&P 500 then. So let's go back to the markets which we've identified, and that very much is getting a pullback here, and we'll see if we get the next move to the upside. So we'll get these markets up and we'll see what sort of state they are in. So it'll be interesting to see what's happening with this price action now, because we've had a strong bounce back to this level again just in the last couple of minutes. But there is, okay, this is a 1 minute time frame. I appreciate that, but there is this descending bit of price action in this market. So we're getting these prices pushing lower. So now this level here becomes really, really important to us when we trade. So if we get a structural failure or a break of that level, there might be actually an opportunity to sell this market, because we're seeing a series of structural failures to the downside. So tough one there in the euro yen, but we continue to look at it and look for those opportunities. It's looking like there's a series of structural failures to the downside. So actually the 32.50 is a very, very important level now in the pound dollar. Yes, it can support prices, but if that breaks, then of course it can add a lot of volatility to the downside. So we're currently in between these two levels. Let's see if the price breaks above 32.64. It's a structural failure to the upside, and we'll be looking for an opportunity to buy it. And if it breaks below the 32.50, so there's only 14 pips difference, then we'll be looking to sell it. Or if not selling it, then because we'd prefer to look for opportunities to buy, and we're getting a little push higher now. Okay. Okay, let's have a look. There's enough resistance around this level to see if we take a small buy trade. Now, we already have, we already know the kind of percentages based on our capital that we would like to execute when we buy, and we'll go ahead and take that trade now. And what we're counting on is the fact that there's going to be enough resistance around these levels to prevent these prices from going lower. So we do expect the yen to continue to weaken. Now, we've effectively got in this market, let me see, a 14 pip stop loss. So really we're looking for, so at the 14903, so we're looking for a 1.5 times the so what we're looking for is a 1.5 times our risk. So we're risking about 14 pips and we're looking to gain about 22, 23 pips to the upside. So that's approximately 1.5 times our positive risk reward. And let's see if we get a good opportunity in this market. So the one thing we're concerned about is the sort of the bearish bit of price action that we're currently seeing. But there's plenty of resistance in and around these levels, so this bit of price action doesn't overly concern us as of yet. However, if we get a break below the 148.89 level, I'm just going to bring that down to the just bring it down one more pip, just so that we have our stop loss just below the lows in here. So let's see if this level holds. If so, we're still hopeful of this market perhaps making new highs. If not today, and I suppose what's important to have is the bigger picture view that we prefer to be looking for opportunities to buy this market rather than be looking for opportunities to sell it. So that's why it's a buy-only trade. That's why we're looking for that opportunity to present itself. And let's see if we get to create a bit of an opportunity down at these lower levels. So what's very interesting to see is the fact that that this market has failed to break below the 131.54. So and that's quite significant because we know it's a strong level of support and resistance. Yes, it might peek through, but it needs to close beneath those levels for us. So we might get that little move to the upside from this level and a little bit of and if we get a little bit of bullish price action in here, which we are, so now we are getting this bit of strength coming in here, and let's see how long this lasts for. You see, we do know what our directional bias is, you see, so we are looking for opportunities to buy all of these four markets actually as things stand. So that's now a structural failure to the upside, the 1709. And there's the structural failure to the upside in the pound dollar, which is the 32.64. There we go. Let's get into the euro dollar, and we'll buy at this price. So we now got structural failure to the upside. It's the first one to give us an opportunity. Of course, when we get into those trades, we want to make sure that we move our stop loss straight away. We never expose our capital when we look to take these trades, and it's 1 pip difference. So what we can see in here, we've only literally got a 9-10 pip stop loss in this market, a 9 pip stop loss. So we'd expect these markets to squeeze up to these higher levels. We'll take a note of that. We'd be happy to book in profit somewhere around these highs here. So almost a 1-for-1, a little bit more than that in terms of risk reward. So that will give us a good viable opportunity to the upside. We're getting close to that same level in the pound dollar. Okay, of course, guys, do feel free to post any questions that you might have into your chat box if you wish to do so. If there is any terminology or anything that I've covered or anything that I've mentioned that you're not too sure with, that's obviously what we are here to do. So we're looking for these opportunities, and they're called structural failures. You know, that's why we're getting into this trade to the upside. So let's take the euro dollar, for example. We have experienced a series of structural failures to the downside, but only to a significant level of support in this market on a bigger time frame. And of course, when we look at the daily time frame, we can see that what we're looking to trade is this bit of price action here, where we get the strong pullback and we get the extension of this market pushing higher. Now, what we are doing at this point, so the initial trade without a doubt was this morning, the 1683. So there was a really strong profitable trade earlier this morning. And what we're actually looking to do now is to buy the pullback. So we've got a bit of a pullback, and we'd expect this market to maybe even continue above the 1725. It's what's called a high probability trade setup, but it's there's more reasons to get into it than there is not to. So that's always a part of a trader's toolkit when they trade. So that's the euro dollar. So when you start putting everything together, your understanding of technical analysis and your ability for to look at multiple time frames, to put all that information together, and practice an approach which is based in kind of consistency and a little bit of discipline with your capital. So understanding where you should be looking to place your stop losses, and of course have a particular target to aim for as well. So we'll go right down again. In fact, we'll go into the 1 minute time frames. So when we look at this price action, do we expect this market to pull back? Absolutely. Now we will be pulling back into a level of support around the 1709. So in fact, that's not too far away at all. So now what we've experienced for the last few hours is structural failures to the downside, and now we're wanting to see structural failures to the upside. Because don't forget, when we trade, a definition of an uptrend is higher highs and higher lows, as well as the market is moving in favor. And a definition of a downtrend is of course just the opposite, a series of lower lows followed by lower highs. So that's the definition of a downtrend. So what we've seen is a series of lower highs all the way down, quite easy to identify, fairly straightforward price action until we've got to this stage here. So we've pulled back, that would be constitute a lower high, and we get this next leg lower, although there's something very different here at these levels. We've had a bit of a rejection, prices are not that comfortable moving lower at this price. So what we've had the buyers come in, take control of this market. And don't forget, when you do trade, it's a constant battle between buyers and sellers, and it's playing out in front of our very eyes. So what we need to be doing when we trade is to be nimble enough to be able to navigate and understand what's going on. So what we've experienced here is just a straightforward pullback to a previous level of support. We get our structural failure, and we're looking to buy this market to the upside. So very straightforward trade. So that's an uptrend, and that's a downtrend, and that's what really we look to do here. We look at the daily time frames to see, right, do we want to be looking for opportunities to buy this market or sell this market? Once you've done that, you can then go in and identify market conditions, because sometimes you might get the analysis correct in terms of the direction, but having the market conditions for you to trade is something very different. So hopefully that's what you will pick up the longer you're with us, is identifying these opportunities and just trading price action, trading what price is doing, and become a bit of a master at that. So we're getting the pullback, which would be expected. Now the reason why we got into this is because this is a really strong level of support, so it's got to work really hard to take us out of this trade, and that's probably the best you can ask for, is asking the market to work super hard to really confirm to us that this price structure is going to fail again. And if that happens, then obviously we'll secure a loss. It's a very small loss, but the trade idea still exists. We won't be necessarily looking to buy at a lower price below these levels unless something significant changes. So it's bouncing back, and now we're at this level of support again. So we'll see if we get this extension, if we get the next leg up. If we do, we'll stick with it. We'll look to see if we can generate a consistent return. Okay. So that's the euro dollar. The pound dollar is still procrastinating just beneath these lows, the 32.64, and we're reluctantly moving higher in the pound yen. So just trying to be consistent. What we were doing here is potentially aiming for the structural failure up at these highs, and if we get a break of 149.10, then we're getting a nice constructive move to the upside. And that would be a really strong structural failure actually, and we would the likelihood is that we'd get a really strong winning trade out of this. It still needs to work hard. Yes, it could roll over to the downside, but again, we want to cherry pick these areas on bigger time frames and decide, yes, this is a really strong level of support. Of course it can flush lower and shut us out, but we want, again, this market to work very hard for us when we trade. And look to stack the odds in our favor, which is what the principle here behind the live trade room is all about. It's exactly what we're looking to do. Look to stack the odds in our favor when we trade these markets. Okay, so so now it looks like we may need to be a little bit patient, really, with these markets. So let's see how we get on with these markets. So the euro dollar is just creating a bit of a floor at the, the euro dollar is creating a bit of a floor at these levels in here at the 1709. So that's exactly what we would like to see to take this price to the upside. The pound dollar is really threatening to break above the 32.64 level. And we'd want to see this little structural high be taken out now in the pound yen. The euro yen is looking certainly stronger. Okay, so now we are beginning to get that structural failure in the euro dollar to the upside. Very, very important. So now we've broken this level, we've actually closed above it, the 1714 level, and from here we want to see the continuation, maybe not in one move, but maybe in two moves. We'll be looking to potentially look to book in profit on that trade. Now, the euro yen, clearly it's the euro that's moving. We are getting this sort of prolonged structural failure. So let's see if this price closes above the 131.62, and it looks like it's going to. This is a 1 minute time frame, so we want to see this market close above that level. So this market will close any second now. See if we get continuation. Right, let's get into this market as well. So just beneath this low in here, we've got a 1 pip stop loss, so we don't want to be so tight there. We do want it to be just beneath the low. So we are talking about a 12 pip stop loss in this market. So we'll keep this trade open just to see if we get and we are now getting this breakout, the structural failure beneath this low. So this is another trade that we'll be looking at to take to the upside. Just want to see what the close is behind the pound dollar. So there's the close. So a really nice, strong, bullish bit of price action there. So now, do we get a little pullback off these highs, or do we get some extension? If we get extension, we're happy to get into it. If we get a pullback, we'll wait until it comes back to the 32.64 and just try and behave really consistently. Wait for this market to come to us. Don't be too hasty and jump into it. But we will see if we get continuation, which we are getting now. So let's get into this market now then. So once we're in here, of course, from a risk management perspective, we want to make sure that we move our stop loss. So just beneath this little handle in here, 13 pip stop loss in this market, and we'll monitor this market to the upside for the short term. So all these trades represent, in fact, all of them are pullback opportunities. So I suppose the dynamic of all of these trades, apologies, I'm gonna take an extra 4 microlot trade just in that one, just so that we're trading 5 microlots across these currency pairs. That's just suitable for our capital, and it's kind of the levels that we trade at. But what we can do without a doubt is still work with the same stop loss. So the euro dollar is close to our take profit. The euro yen is still building, like we're going to see some extension. The pound yen is threatening to push higher. If you look at that, and we have price action which is enabling us to see these prices push higher across the board. We just need to be very patient and just wait for those opportunities to arise. So hopefully we'll get a couple of winners under our belt today. See, when you trade these financial markets, the pullbacks should never really become a significant problem, because if you know and understand that pullbacks are a part and parcel of trading these financial markets, then be prepared for them. So really get into a trade knowing and understanding that the pullback is likely, but then you want the base of that pullback to stack up, because if it doesn't, then that's your first indication that the trade is not going as you would expect it. So we're looking to take profit now, hopefully just get a little squeeze higher. Just adjusting the stop in the euro dollar, just a little squeeze higher. There we go. So we've just booked in profit there in the euro dollar. We're looking to do the same. We're now in profit on both our trades in the we were in the pound dollar, and as you can see, the yen pairs are just struggling just a little bit. It's not that we need to stick with these trades forever, but certainly short term, we give them a bit of a better opportunity to the upside. So we've already booked in one profitable trade in the euro dollar over the session, and we would definitely prefer to be buying these 3 trades rather than selling them, even as things currently stand, and of course that could change very, very quickly. So now it's a case of just being patient and just watching the price action and waiting for those opportunities, and mitigate risk if you possibly can. So take risk off the table as early as possible. So that's what we'll be looking to do, hopefully very, very shortly. And now you're really wanting to identify, is there anything now in these markets that has changed? Has something fundamentally changed? And what we mean by that is often what are called structural failures. So do we get these markets breaking to the upside? Do they show exhaustion? Do they show us that there's no longer an appetite for this market to push to the upside? If that's the case, we're just going to cut those small winners or small losers short very, very quickly. Those are not the trades that we want to focus all of our time and energies on. So really it's looking for those high probability trade setups, and as long as there's no sort of reason to act, then just be super patient, wait for those markets to eventually start to move, be as consistent as you possibly can in your approach, remain disciplined with regards to your capital. Can't stress how important that is. You can see there's stop losses in all of our markets, so at any one point, if the market's turned against us, then we protect our capital. Okay, we expose the few pips that we are putting down in order to, from a risk reward perspective, to make this a viable venture. But all in all, it's important to try and remain consistent when you trade it. And again, it's something that's banded around quite a lot. You often hear consistency is very important. Yes, it is, but how do you be consistent? How, and we're talking about consistency in decision making as well. So having a methodology which you feel comfortable in, that allows you to make decisions which look to generate positive risk rewards off those markets, for example. That's what we're talking about. And one major way for you to do that is by multi-time frame analysis. So looking at the bigger time frames, looking to go with the market for that session and not against it. So that's something that we found very, very important, and something that's very useful for traders as well. So what we want to see happen in the Euro Yen is a break above this little handle in here, just above our entry price. If we get a break above that, we even have the potential to bring our risk right the way up. And it looks like we'd like to see a close above this level if we possibly can. So what we want to see is a close above the 131.65 level, and it's not looking like we're going to get, certainly based off that close for sure. Okay, so I'm just very conscious of time now. It's what is quite interesting on the Euro-Yen side is a little bit of a structural failure to the downside now, and we are below this line once more. So what we're going to do is we're actually going to leave it as it is. We will expose the 12 pips that we are currently exposing in this market, with the potential to move it to the upside. Now we've already booked in a 15 pip winner in the pound dollar, and we do expect these markets to continue higher off these levels. So if we can get ourselves into a situation where we can you know, maybe take a 30 to 40 pip gain for the whole session, then fantastic in the space of an hour. So we'll continue to monitor these and see if we can capitalize on these opportunities. Okay, so just taking note of time, that about concludes really this live trade room. What I'll do is I'll just finish up this particular section. So if you'd like to connect with us, please do. Of course, do give us a thumbs up if you possibly can, and do subscribe to our channel below. So you can just search the Live Trade Room through YouTube, or you can also connect with us on Facebook, Instagram, Twitter, and LinkedIn. The details are all there up on screen. So for those of you that are perhaps interested in learning how to trade these financial markets, excuse me, those of you that are very interested in learning how to trade these financial markets, we've got a wealth of content available for you through our website. Now we are currently offering a 14-day free trial for anyone that just wants to get into the back end, see what we offer you, the supports that are available, the access to the live trade rooms are all there. So all of that is really valuable, and so do have a look at our website. Go to just click on the link below if you want to click on the 14-day free trial. Then do come on board and do join us, because we will be continuing this live trade room through the live trade room very, very shortly. So if you do want to join us, do feel free to do so, and just click on the link and we'll see you on the other side. So from everyone here, do take care, and we look forward to seeing you all soon. Bye for now. Take care. Bye-bye.